Hi, Sushma.
Hi, Tyag. How are you?
Fine, thanks. And participants, here is going to be an exciting session. I just want to brief about Sushma Kaushik. She is an investment director at Avishkar Group. So having said Avishkar Group, it's a investment trendsetters in the impact investment business. They're also pioneers in social impact businesses across India and global markets. So Sushma comes with the strong leadership skill sets. She is much focused on customers and execution of strategies. She's also a board level member and also advisory to various startups in India, with many startup companies looking to her as mentors. She's also, I can say, a role model for many aspiring professionals. With that brief, I welcome once again and greetings Sushma Kaushik. Today, the topic being Fintech and Banks, which is her forte, and agenda for strongest together going forward on this COVID-wrecked economy. She's going to talk about her whole take on how the entire industry and her experience in this time and going forward the roadmap. Over to Sushma Kaushik and the platform team. Thanks, Sushma.
Thanks, Tyag. That was a really nice introduction, and really thank you for inviting me on this panel. This is the first time for me to be doing something virtually, and I guess it'll take a little getting used to, but I'm very happy to share, my thoughts on the sector and where I see things moving, and how I believe things could unfold. Because this COVID, while it has been quite unnerving for all of us, and we're all not used to being locked down at home and working from home and still trying to be just as efficient as we were before. But it has given a lot of us time to sit back and take stock of things which we otherwise didn't have time to do, and probably see the bigger picture better now. So actually, in some sense, it's good that we are going through this freeze period, so to say, because it's giving a lot of us time to think and just assimilate on what's happening around us. So yeah, I'm happy to start off on this.
Yeah, so going forward, before coming into the question and answer session, I just throw open the platform on how is the whole, the kind of your take on the investment scenario. How is the PE, your friends and colleagues in the PE and VC market look at the present and going forward, what's going to happen? And what is the roadmap ahead collectively after the post-economy of the COVID?
Sure. Yeah, so see, as I mentioned, I don't think there's anyone here today who can say they have gone through a similar crisis in their life, right? So there's no experience we can draw upon from, seniors, colleagues. We are all fighting this for the first time. It's the unknown, and we don't know how it will pan out, what will work out, what will not work out. And so this is all hands on deck right now. And so even in the PE VC industry, I think we've gone through, it looks like a 3-phase transition. In the first phase, most of us were in denial. We believed that this whole COVID is something that will always happen to somebody else and will not affect us till it actually affected us. Then when it did affect us, I think there was a phase where, from the denial stage, we moved to, okay, this too will pass phase, and we are currently in that phase where we believe, or we are quite optimistic in saying that, oh, this will end in the next few days, right? And that few days has moved from 21 days to 40 days to we don't know how long. And so so now it's we have to go into the third phase, which basically is how should we be best prepared now that this has happened and become stronger as we go forward. So across VC PE industry, I think that's the position people are taking. that all of you must have already heard of the big bang news of the Reliance Jio and Facebook deal, which was a $5.7 billion deal, right? I mean, the largest deal, and that too at the height of the COVID crisis. So multiple takeaways from a transaction like that. Basically, it says that India is a very, very strong market. It sends a very strong signal to everybody globally that an emerging market like India cannot be ignored because you just saw Facebook coming in. So that gives a lot of hope for PVC industry because we always have a forward-looking view on investment decisions that we make. So it's not all gloom and doom. We just have to wait out this phase and move into the next phase of growth. However, what PVC folks are currently focusing on are existing portfolio companies, how to support them in every way possible. Capital is just one raw material, but there are other support that we can provide, whether it's technical support, whether it's human resource support, whether it's just knowledge support. That's a focus area that we are looking at. And of course, taking stock of the financial strength of companies. Do they require additional support in that also? Because there are basically companies can be put into buckets. One is those who will probably perish the COVID period or this kind of a lockdown, and those who will survive the COVID period, and those who will survive, how strong will they come out of this COVID? So that's largely how people are evaluating things, and yeah, we are no different from those.
Oh, great. So we touched base on discussions, rightly said. This big news of the Facebook and Jio sent a lot of strong message across. So my question or my take is, will there be such partnership, such joint ventures likely to come up in the Indian space, maybe be it banking and fintech? That's where we are coming to. So do you foresee the strong partnership now could emerge with the players in the fintech and the banks? It could be private sector banks, or it could be payment banks, which is the case of Jio. What's your take, Sushma?
Absolutely, right? I mean, the whole fintech space had become so fluid that it was very hard to typecast a certain type of entity as the entity, right? And also, when people like us do competition analysis and competition mapping, in the last 3-4 years, it has become increasingly difficult to actually ascertain who competition is, because we don't know in what form or shape it's going to come. Who would have thought that Facebook is going to partner with someone like Reliance and going to disrupt the SME market in such a big way, right? I mean, I don't think anyone could have anticipated something like this ever. And so, I think most unlikely kind of partnerships are definitely going to emerge from this. Again, people have to think out of the box. People have to think innovatively on partnerships. Things that had not even crossed their mind, they will have to relook at those kind of partnerships to see how to come out stronger, how to sustain going forward, because there is going to be a new normal. There is no denying that. And those who are equipped to the new normal are the ones that will outlast the others. Otherwise, everyone knows what happened to dinosaurs.
Absolutely, absolutely. Well taken, well said. Sushma, if this leads to the obvious other question, in these VUCA times, the volatile, the uncertainty and complex ambiguity times, would you foresee a kind of acquisitions, or I can say takeovers, happening in this fintech and bank space? So what's your take on that?
I am a strong proponent for these kind of partnerships, so to say, right? Because in this kind of a shakeup, and when an external shock of this magnitude happens, it eventually leads to consolidation at multiple industries, and not just payments, not just fintech, not just financial services. You will see industry consolidation in a host of sectors. And the basic premise in any consolidation is, how do we become biggest? How do we become the strongest, right? So that's basically the essence of consolidation. Similarly, in the financial services space, we are seeing very interesting evolution of different types of companies. There are the traditional bankers. Then there are those banks who are, quasi-traditional, quasi-modern, forward-looking, knowing full well where they want to be in the future. And then there are those fintech players who are all future ready, right? So in today's environment where there are liquidity challenges, there are existential crises for many, I see a lot of partnerships that will emerge. And in fact, it's those agile promoters, entrepreneurs who can think ahead and who are future ready and who identify the right set of partners for consolidation, whether it is acqui-hiring, whether it's consolidation for synergies. You might not have certain skill sets that have already built, and you find a partner who's already tech ready for you to just consolidate. Maybe that's a partnership waiting to emerge. Many companies will see that they are not digitally enabled, which will be the way forward going in the near future, and how quickly to cut down the go-to-market time. If there is someone who's already ready with certain products or services, how quickly to collaborate with them and bring them under your fold. If you are bigger, you have a stronger balance sheet, and you can sustain this COVID period, then can such partnerships make you stronger? And so absolutely, I do believe consolidation will be the way forward. You will see a lot of M&A transactions happening, and that is something that one should keep watching out for.
Yeah, yes, that's a good takeaway, because this is one such thing that is expected to happen. As you said, the stronger, the mightier will extend his arm to look around and see whom or all he can acquire in terms of technology or in terms of an IP product. And that sets the trend for the joint ventures, the consolidation, the mergers and acquisitions. Now, this again leads to a very interesting topic, which even the government or even the regulator looks at, Sushma. Is my take is, how do you foresee the foreign direct investments, FDIs, in this calamity? As you said, the consolidation one side, and other side, there is again a positive outlook by the PE and VC community. How do you foresee the FDI scenario in the post-direct economy? Just a thought of your take on that.
See, FDI in India has been extremely active. Just to throw some numbers, between 2009 to 2014, the FDI in India was close to $190 billion. However, between 2014 to 2019, it doubled. It was close to $284 billion. And it's only expected to keep doubling, because India, as I said, is a very big market, a market that cannot be ignored. It has consistently delivered on returns for various investors. And also, all the more reasons now, because everyone knows of the geopolitical concerns with our neighboring countries, and which had been one of the capital guzzlers of FDI. And with a little bit of a trust deficit that is creeping in, people are going to be moving a lot of operations out of these geographies into India. And that will again throw up a host of opportunities for a country like us. Hopefully, regulatory policies and government policies will be more conducive to welcome this kind of, participation from outside. Manufacturing facilities can open up. When manufacturing opens up, liquidity is a requirement. Either you provide the liquidity domestically or you allow for foreign money to come in. We all know that there are constraints on domestic liquidity. So clearly there is a huge scope for FDI money to come in. And I think we are going to continue to see that to happen.
Okay. This leads to Sushma, a very sort of sensitive topic, and I will not embarrass you. Also, I have been reading in the recent thing from the market. The government is concerned, or maybe looking around as to see whether is there any investments from the neighboring or the bordering countries, not specific to a particular country. There is a protectionist kind of attitude, or will there be a kind of swathe of investments from one of the mightiest of the neighboring or the bordering countries? So what's your take? Is there any, or our laws or our, as you said, regulatory and other things are stronger enough so that, even in the e-com investments, if you see, some of the bordering countries have taken large, investments. So what do you foresee in this COVID economy? Will the government take enough measures to protect the fintech community per se, or the laws will be much more strengthened? I need to open for
Sure. So actually, I think the new FDI or the tweak in the new FDI policy that has recently come out is actually in line with what many European countries have introduced, right? And it also has come in light of them seeing that many of their essential services companies have come under duress, liquidity duress and distress because of COVID. And they started seeing a lot of interest from some of the larger Eastern economies in putting in or taking substantial interest in essential services, and banking, insurance, and such sectors, and that could be discomforting for many countries. And so I think in the same breath, India has followed suit in implementing this. However, India also recognizes that almost 10% of the FDI that had flown in actually came directly from this large economy, without taking names. And that was direct investments, and there were indirect investments of an additional, what they say, about 10% more. And so it's also important to understand that these set of investors were the most active investors in India since 2014 in the consumer tech play, because clearly they saw consumer tech play out so beautifully in their own country that they see India to be the next frontier for consumer tech. And where else can you get such a large customer segment, such a large customer base, who are all digitally savvy, who are all young, and who are all hungry for consumerism, right? So all the tick boxes are ready, and so it only made sense for them to dump a lot of capital in our country. And unfortunately, our governments or even domestic pools of money was not available for these startups, and they go wherever the money comes. So the startup environment has thrived because of such investors, and that's why we continue to see vibrant innovations from India. So if India suddenly wakes up and cuts down the tap from these countries, it is going to be detrimental to us. So I don't think the policymakers are thinking of it as cutting or restricting liquidity from these economies. What they are saying is they want to be careful. They just want to ensure that there is no change of control event that happens where foreign ownership takes over very important companies or banks or insurances. And so that's the reason for this measure. So it's not a cause for concern right now, and it's just wait and watch. And I'm sure even the regulators are just waiting to see how this whole thing pans out.
Um, which other country, Sushma, you think the investment potentials will come from, where the FDI may come from? In general, is it the advanced economies on the EU side, or from the other parts of the globe?
So I'm guessing you're talking of post-COVID, when
Post-COVID, it's post-COVID.
Yeah,
Yes,
when people
yes.
have got their own house in order, which currently no one's house is in order right now. But clearly, economies which have surplus funds will be the ones who will continue to participate actively in FDI. We are seeing a lot of investments from Japan flowing in. Europe, I think, will still be a little tepid, but because of their own internal problems. But if once they get all that in order, you will see a lot of surplus again flowing in, because everywhere else, everyone is talking of a global recession, right? So they are talking of negative growth. India, we are crying because someone downgraded us from 6.5 to the first 5.5, then 4.5, then 3.5, and Fitch now has pegged us at 1.8, and we are still crying, right? I mean, those countries are negative, so obviously money has to flow into our country.
I'm just thinking, apart from the fintech and the other e-commerce sectors, we have a large economy. As you said, we are one of the growing economy next to the the highest growth factor that we have shown in the recent past. So apart from the fintech and also the financial inclusion part, which Avishkar by itself is very strong, which other sectors likely to see more investment, because this will open up more FDI and the whole ecosystem towards the GDP growth will increase.
Right. Okay, so there are multiple layers to the question you asked. First, I'll start with, from Avishkar point of view, what are the sectors that we will continue to focus on? I mean, Avishkar has always been supportive of those sectors which largely fall in the essential services bucket, because those are the requirements of mostly the excluded or underserved population of India, right? So whether it is financial inclusion, whether it's agri, whether it is food and agri, healthcare, education, this segment is largely underserved by any of these sectors, right? Are not served as much. And what we've seen that even in an environment like a COVID situation, most of our companies continue to do well because they are essential services at the end of the day. They are not discretionary spending. They are not consumption-led spending. They are what people require. And so that will continue to be the DNA of our investments. And even going forward, I don't think anything is going to change for us. We will continue to focus on things like waste management. Even in a COVID situation, you still need a waste management facility. You still need ATMs. You can't say, okay, COVID, so let's just shut ATMs. Nobody needs cash. So those things, that will continue to be the mainstay of Avishkar.
Which other sectors, apart from this essential services you said, maybe Avishkar, and what you foresee the other your counterparts will look at? Maybe real estate, maybe infrastructure sectors?
Sure. So I think the way people will start evaluating sectors and companies would be there would be a pre-COVID lens, and there's going to be a post-COVID lens. And the post-COVID lens will be very clearly to see those businesses which will continue to thrive in a COVID or a pandemic-like environment, right? Because as everyone knows, there is no timeline to the end of this COVID. Everyone is saying that every 3 months, 6 months, this could continue all the way till FY22, right? So, and this is just one incidence. There could be multiple others. So now the lens would be how pandemic-proof is a business. That is, will it continue to thrive, survive in a pandemic-like lockdown? And what does it take for you to continue to thrive in this environment? So that will be the most important lens that people will apply going forward. Again, as I said, essential services will come out to be COVID-proof. So, like for example, Avishkar invests a lot in agri-businesses and agri-services. And we know that India is largely an agrarian economy even now. And we still have the Rabi crop, the Kharif crop, and all the supply chain that supports this agri-economy is essential service. So that will definitely be a focus. But so saying, irrespective of the sectors we choose, one key element that we will be looking for is how technology enabled savvy are these companies. As I said, will they be able to survive another pandemic lockdown? And that will be how we will evaluate deals going forward.
Right. Your take on the global scenario, how the overall your counterparts and the high net worths, the funding companies look at this whole scenario, because you'll be in conversation with your counterparts, with your peers. So how do they see what is the overall thought process leading to, and what is the take on this whole thing post COVID?
So as I said, everyone is looking at. So again, there are two kinds of people: those who see the glass half full and those who see the glass half empty. Unfortunately, VC investors always see the glass half full, and that there's always an opportunity in everything, right? And so that's how we constantly keep looking for opportunities, and most of the VC world thinks similar. Even in an environment like this, there are opportunities are throwing up. And whenever we get companies talking to us, if we are not able to directly invest in them, we also are looking at consolidation partners for our portfolio companies. And we encourage that, because see, at the end of the day, if one can make a bigger pie in the process and unlock more value, it's just beneficial for everybody. And so that's how everyone looks at it. But answering one of the questions you'd asked previously on how to be COVID ready, I think digital disruption is the name of the game going forward. And billions of dollars have been going consumer behavior change, right? Has dumped money literally on consumers to change a consumer behavior. Everyone who has downloaded credit platform knows very well, the kind of cashbacks one get. Google Pay, all of them are trying to create a consumer behavior shift. Now, with an external event like a COVID that has come in, that it just springboards them into a next level, right? So consumers, whether they like it or not, have to change their behavior patterns. And so that's definitely going to happen. There is a tipping point that will be achieved very soon, where a large critical mass of consumers have transitioned from the old to the new normal. And going forward, you will see a shift in the new normal. Digital interactions enabled by AI, big data will thrive post-COVID. So all those companies which have a digital focus will continue to do well. Traditional financial services companies will turn to fintechs or tech enablers to collaborate and go to market in a new digital avatar. So those are collaborations that will happen. And companies, who have a certain way of working will have to relook at customer service, customer onboarding, employee productivity tools, performance management tools, because work from home is going to become the new normal again. As a business continuity requirement, maybe companies will start looking at an X percentage of staff actually working from home, even a post-lockdown scenario, because we just need everyone to be efficient, knowing full well that if a scenario like this were to happen again, are you ready for
Great.
it.
Yeah.
Unlike
So, thanks a lot. And I had to open this session for a question and answer. I've taken a lot of questions also from the Q&A. I request my panelists and other attendees who are here to, start raising the questions, please. Hello. Hello.
Yeah. Hi, Sushma and Tyagarajan. Can I ask a question?
Yeah, please.
Yeah. Thank you very much, Sushma first, and Tyag for this was a great session. We did have quite a few takeaways from this session and appreciate you taking the time for us for that. I have three questions. The first one is a follow-up question with reference to the Facebook and Geo deal that we were discussing earlier. Would you consider this as a telecom deal or would you consider this as a fintech deal? Because what I understand is that this is really a fintech deal and it is going to change the way digital payments happen going forward.
Sure, Sudhanshu. So to answer that question, I'll ask you another question. Does it really matter whether it's fintech, whether it's telecom, whether it's consumer tech? Because as I was saying, in to typecast any kind of form, shapes, sizes, and entities that you are not comfortable with. And so it doesn't matter whether it is a telecom company or a fintech company, because they will do whatever hell they want to disrupt things.
Yeah, thank you. Tech had was, in your experience, have you seen any private equity player raising a COVID distress assets fund or anything of that sort, either for debt or equity?
Yeah, in fact, that's become a new discussion that has been going on for the last 1 month since we went into lockdown. So, in fact, many of our LPs who are also, several governmental institutions and multilateral institutions and DFIs have all put together a COVID emergency fund. In fact, I think IFC, the partner of World Bank, has put together a $8 billion COVID facility for all their direct investors across the globe, and are now looking at partnering with their GP partners, which is funds like us, on how to support our portfolio companies as well. And they have both debt as well as equity structures available. Similarly, all the other DFIs are also talking of things like this. And so there is a lot of support that will be coming in from the various developmental institutions globally.
Yeah, thank you very much. And the last question that I have is, because you all would have multiple portfolio companies, and as Avishkar, you would look at all the portfolio companies from a distance rather than being actively involved in the day-to-day management. So from a generalistic perspective, rather than getting into specifics of any of the portfolio companies or any of the businesses of the portfolio companies, for the benefit of the team at EPS, we would like to understand what are the top 4 or 5 things that you would look at for the portfolio company in these times of distress and uncertainty.
Sure. So a couple of things. First thing definitely that we saw was whether all our portfolio companies had business continuity plan in place. That was priority number 1. Different companies were in different stages of preparedness. The larger ones such as EPS were very forthcoming. They were probably one of the first few to put together the business continuity plan. They knew exactly what to do, what communication should go out to the employees, how to handle everything. You guys knew it, right? But we also have other portfolio companies in different shapes and forms, who are not as, who don't have as much resources, as many people to guide them. So then, so it required a little bit of hand-holding to tell them that, you probably need to do these things. The second thing was to ensure, the HR sends out the right set of communication to staff. Again, that becomes very important in a scenario like now, where there's a lot of uncertainty. People are very anxious. People don't know what the outcomes will be, whether they'll have a job, whether they'll have their salaries. Those kind of uncertainties are there. So we had to guide a lot of HR to ensure that, at least you manage the situation well and be as transparent as possible. So we ensured that, a transparency be advocated across our companies. And the third most important was to check the financial health of our companies, right? How much runway did they have? How long can they last? Build out scenarios to understand, if a lockdown were to be for 40 days, what runway do you have? If a lockdown were to last for 1 month, 2 months, 3 months, what could the scenarios be? If your revenue were to fall by 50%, what will happen? If it were to fall 0%, what will it happen? So all those scenario analysis were built in to, take stock of situations and then guide the company on how to navigate if there is any financial stress. So that has largely been where all our energies have been focused on for the last 1 month or so.
Thank you very much.
Friends, is there anybody here in the panel or in the attendees can raise questions, please? Hello? Well, that sums up the COVID-19 series, special series, Sushma. It's a lively session and I really enjoyed a lot of takeaways. I hope my fellow panelists and the attendees have a lot of mind share and takeaways. In a 2-month period, what is that mind share you can give us, or the takeaway that you have not experienced so far, either in career or in life, that you have learned and you would like to share it to us?
So I'll share something. So when this lockdown started, I was quite excited because I thought I'll have a lot of free time. I can do explore all my hobbies, things that I had never done for many, many years. I'll do that. I'll spend time with my kids. And unfortunately, I had any of that. And it's only because of that, because I realized because we are working from home, we end up working 200%. And most of our time is fungible, right? I mean, someone assumes that you can pick up the phone at 11 in the night and that you're available